Hello everybody, welcome to the how to stop loss, protect your trades, and take profit tutorial. So first, let me draw a line. And let's say that this is your entry. Let's say you are selling. You're selling at this line right here, hoping that it will continue to go down. The way you would put a stop loss is, let's say you want to put a stop loss right above this candle right here. You would left click, make sure you have it right here, and then press buy one. Why would you buy? Well, if you were to sell, as soon as the price would hit this line again, it would just sell again. So since you are already selling, once it hits this line, you're going to have some buy orders here. It's going to buy the market and then take you out of the trade since you were already selling. The same thing here. Let's say you were buying at this point. You would put a stop loss here and then sell. Why? Because you're already buying. So if it goes down and hits this point, it's going to use those sell orders to take you out of the trade. You always have to do the opposite. If not, it's going to add on to your already existing trade. And again, the way you do that is just by pressing left click wherever you want. Now, you could actually press left click wherever you want it. Let's say I want it here. And then as soon as I press that buy or that sell, I could just move it afterwards and adjust it anywhere I want. Now, when the indicator actually enters a trade, put a stop loss immediately and then adjust it closer. Now, why would you do that? Well, you can lose your internet or your light or anything at any time. There's so many unforeseeable accidents that happen that we actually see happen, completely breaks somebody's account. So you need to be protected. So as soon as you see the indicator give you a signal, go in, put your stop loss anywhere, and then adjust it accordingly. Now, when the trade goes in your favor, you bring it a little bit closer to your entry and then a little above it. So again, let's say you're selling right here. I would keep bringing it closer and then right here, I've broken even. And then I would actually protect my trade right around here, because you have to remember there are still fees and commissions that you have to take into accountability. So you only really protect your trade when it's a little bit further than your actual trade. That way you are fully protected. Now, when should you protect your trades? The thing is, you have to look at the previous candles. So this is a really great example, because if I were to take the trade around here, you can see that these candles are not that big. So I can actually protect after maybe 2 or 3 candles. So if, let's say, I was entering a sell right here, I'm entering a sell right here. 1 candle, 2 candles, 3, 4, then 5. That's when I would be fully okay with bringing my stop loss right here. Why? Because they're super small candles. Look here, very small candles. However, if they're really big candles, you have to wait a lot longer. Let's say you entered it right here. Let's say you entered it here. And you're selling. Take a look at the previous candles. This one was a huge candle. This was a really big candle. Another huge candle, another huge candle, followed by pretty good sized candles. So you're going to have to wait a lot more. Why? Because this very easily could have been a candle just as big this way and then taking you out if you protected it prematurely. So when you have bigger candles, you need to wait a little bit longer, just because that big movement could happen at any point in time to really take you out. And that's if you protect too early. If you protect too late, you could miss the entire movement altogether. Knowing when to protect is just as important, if not more important, than actually protecting. Because that could be the difference between staying in a trade that makes you $100, or that could be the difference between you getting out of a trade negative when it actually could have been really positive. Knowing when to protect is just as important as actually protecting. Why? Because if you protect too early, you could leave the trade negative when it was supposed to give you a lot more money. When you protect too late, you can miss the movement altogether. Now, if I protected it right here and I brought down my stop loss to my break-even point, thankfully it did not come back and get it. However, if I were to protect it here, if let's say I entered it right around here, and then I have one candle and then another candle, I'm like, I think I'm doing okay. I'll just put my break even right here. You can see that the next candle after that would have gotten me out on my break even, not even because I would have lost money because of fees and commissions. And then it went all the way right back down. You can see that it literally did this movement and then came right back down and closed right here. So I would have lost out on all of this money. I would have lost out on basically 10 points. And that's why knowing is just as important as doing. Now, on the other hand, there are two ways to take profit. There's two ways to take profit. First off would be to find a target line, which the indicator will actually give you here on the indicator, and then place a hanging order there. If the target line, let's say, is here and you're doing this sell order and you press a buy right here, remember it has to be the opposite. You leave a hanging order because then when the price comes and hits it, it takes you out. Because when the price comes and hits it, it takes you out. Now, for the hanging order to actually work, the price has to come and actually reach it. It has to touch it. Or you can do what most people do, which is just exit at market, which means you could exit at any point in time, which is faster and more secure because you never know if the price is actually going to reach that hanging order. Thank you so much for watching this tutorial. I hope it helped, and I'll see you in the next one.